Would you like to learn a brand new and innovative way to invest your extra money that has a low barrier to entry and low competition? What if I told you that it is a guaranteed method to get up to 18 to 20% return on your investment? Tax lien and deed purchasing is the only way to get into the real estate market through the back door. No credit and no loans needed. This method isn't commonly taught, and therefore the competition is very low, for now. Put together a 14-hour info-packed course which will teach you everything you'll need to know to get started. Learn at your own pace, step-by-step guided video and aids to start you on the TLC deed investment process. The course offers many learning tools for new investors, helping ensure you safely invest in tax liens and deeds. Contact us today and join the buyback team.
Blessings, blessings. Welcome to Primetime Home Buyers, the buyback team session of Secure Your Energy. And you're here with your host, Lashley, your team lead. And yes, we're here for our second broadcast for the year, and we're coming in hot. I do miss you guys. Just know a lot's been going on. I always come in talking about just a lot's been going on. Yes, but I've been trying to keep up on the content as well as my investments, and I hope you are doing the both. Okay, so make sure when you don't see lives from Primetime Home Buyers that you're going back in some of these videos, these 45-minute sessions, giving you deep details into certain key elements into investing in tax liens and tax deeds. But what you know, we also do a session called Secure Your Energy, and we want you guys to be educated. So this is going to fall under both Secure Your Energy and Primetime Home Buyers, because if you're part of the Primetime Home Buyers membership on the website, this is a particular section for you as well, where we talk about finance education, assets, tools to house your assets, other investment avenues. You know, we want to keep the conversation broad, not only tax liens and tax deeds. We also talk about risk factors and scams. You know, we're going to be highlighting that because there's a lot of scams going on, and there's a lot of people that are in bad situations. And you know, I got a good heart. No matter how much I am that type of investor that, you know, do my due diligence, ask all the questions, make people feel uncomfortable, I want to make sure that I'm coming in wholeheartedly, and I hope you guys are too. That's why I share this information, so you can come in whatever practice, honorably, educated, and making sure you're not being scammed. Okay, so in this particular broadcast, it's going to be formal, but I think I'm going to keep myself in the corner of the screen. We're going to be talking about, is a home equity loan worth it? What should I know? So some of the things we're going to get into is, what is home equity? You know, how do I access it, and some of the pros and cons to it, and you know, just details for the homeowner who is in a situation where they may want to pull out their home equity and need a little bit of education, or the investor who have a particular property and saying, hey, I have some equity in this home, so should I pull it out and actually invest in a tax lien or tax deed, or I don't know, Bitcoin or whatever anybody want to do. But like I told you guys, whatever you do, you need to be educated and make sure that the pros outweigh the cons, no matter what it is. So we're going to get into it. I was having, no, I'm not going to say I was having some issues, but we're going to put the PowerPoint on the screen. Please bear with me. Bear with me. I hope you guys are having a great, great Friday. I'm also coming back on Monday. I think I have some time on Monday, so I'm gonna come back on Monday, and I think we're gonna do like a Secure Your Energy trending topics. I have some trending topics that I want to share with you guys. So give me 1 second, because doing a little different. Because usually I pull a PowerPoint up different. I want to make sure that you can see now my head on the screen. Okay, is that better, y'all? I think that's better. Oh, I was about to say, I know that thing ain't about to start printing out stuff on me. Now, let me see, can I put it bigger on the screen? Show slideshow. All right, so we're going to start with a PowerPoint, formal PowerPoint, and this is entitled Primetime Home Buyer, Homeowner Guide to Understanding Home Equity, okay, as well as investors. Now, Homeowner Guide to Understanding Home Equity. What is equity and how to calculate your equity. Yeah, I know I'm always making that grammatical error, and I thought I added it. Anyway, coming in hot. What is your equity and how to calculate your equity? Pros and cons to using your equity. Using equity to gain assets, okay? What is equity and how to calculate your equity? That's going to bother me. Home equity loans is a loan that can be added on to your current mortgage to be used for improvements, large expenditures, and other property related expenses. Home equity loans can be powerful tools for you guys who want to obtain large amount of funding for particular projects, and we're going to talk about that, okay? Home equity loans can be beneficial because of its low interest rates in comparison to non-secure loans or credit card usage. Now we know the credit card interest rates is up to 26%, y'all. Pay attention. Don't go in on these offers. Sometimes if you can't pay it within a year, it can become a problem. Most individuals use their equity for renovations, to purchase second homes, or even invest in properties to acquire assets. So we're going to talk about what can be good properties, and also questionable home investments that you want to kind of be leery of when you're using this particular funding. Now we're talking about this particular funding, okay? Because I'm gonna even look at tax liens and tax deeds a little bit sideways if you are not educated in it. You haven't been successful in tax liens and tax deeds. I don't think that you should take just a whole bunch of home equity, a home equity loan against your home to invest in tax liens and tax deeds unless you are sure that you're going to be able to obtain a process through being successful. So that's one of the things I want to highlight because, I'm a tax lien and tax deed investor, and at this point I will feel comfortable doing that because I'm about, 6 years in. But at the beginning, I wouldn't dare. I wouldn't dare. I would not, okay? So let's move forward. Home equity loans is considered a second mortgage. So we're going to talk about the payments and what to expect when you're dealing with a home equity loan. In all aspects, a home equity loan is based on the difference between your home value and what you still owe on the property. So that's it in a nutshell, okay? How home equity loans comes with fixed interest rates that can be paid within your monthly mortgage plans over a term of years, and that is in a best case scenario, okay? That's just a best case scenario because there are some home equity loans that are different, and we're going to get into it. And you want to make sure that you read, you ask questions, okay? Don't get into a type of agreement where you're going to be in trouble years down the line. So home equity loans. Home equity loans required. Okay, the requirements is loan debt to income ratio need to be balanced based on the lender requirements. So we're talking about this because these are the things you need to know. Okay, you don't want to go in blinded. You want to have all these things set up. This is why we're going into secure your energy, because secure your energy happens over time and happens over different aspects of what you're doing in your financial, life, and that's saving, budgeting, planning, making a goal, reaching a goal, crushing a goal, what you want to save. So that is what you want to keep in mind before you even try to apply for a home equity loan or a loan period and a credit card, okay? Now, we're coming in hot this year. We want to come in with a great mindset. We got to practice this. So the other requirements is income requirements. So you have to be actively having income. So you can't just own a home like, yeah, I want to pull out my home equity. They're going to be like, okay, pay stubs, because basically it's just pretty much like the basic lending process, and even as detailed as the home loan process, the same, okay? Underwriter and everything, okay? Good credit is something that you need to know. Your credit's going to be pulled. Good payment history, and available equity in the home between 15 and 20%. So you want to know that. So this is why we teach you how to calculate your home value, understanding how to compare it against the comps, how much is fluctuating in the market. Are you at that 20% mark right now, or 15, and is it worth it? Okay, because there's other aspects to consider, such as interest, such as fees that we're going to talk about, okay? Now, pros to using your, I don't understand why I don't have your there. That is so bothering me, but I'm going to ignore it. Okay? So OCD and not just, okay. Pros to using your equity. Okay? Most home equity loans have a lower interest rate compared to unsecured loans and credit cards that we just said, such as the credit cards is about 26%. And unsecured loans, they can come from crowdfunding, they can come from banks as well. They do that, but because they're unsecured, they usually start at 18% or better. Now, when you're doing a home loan, there is a cap. So right now, the equity in home loan is a cap, and right now we're like at 8%. So you have to weigh your options. And 8% is a lot because that is not what the people are used to. You already know, guys. I'll be standing up. They talking about, oh, your insurance is going up because of all of these factors, inflation, and I said, did my pay go up? Okay, how we supposed to buy food? Okay, so I'm just being honest. So you want to be aware of these particular options so you can secure your energy and make the right decision. So in the long run, you don't find yourself paying these compound interest rates and never getting the balance down. Okay, you want to make sure that your debt to income ratio, your income is actually enough to pay your debt, and you want to keep your debt below 10 to, to be honest, 10 to 20% of your income. It's not easy doing that, meaning like at least you have 10 to 20% to save after you pay all of your bills. But we know what situation we in, people. So it's just being grateful to pay your bills, but you want to be able to try to have a savings plan, okay? Even if you have to get a little second shooby-dooby, second job, a little hustle, something simple. So next, moving on. So the pros of it can be predictable and have a stable interest rate within the loan agreement. So that is great, okay? You don't want things to change. I do apologize. On the days that I'm asleep, it usually tell me get up and upload. I've been working, so that was my alarm. Okay, so now what that goes to say, make sure that everybody can hear me, y'all. Can you hear me? Okay, so now I just want to make sure. So it can be predictable when it comes to interest rates, and these are things you want to consider. Okay, you want something that is predictable. Taking on a home equity loan can sometimes extend your payment period, adding 10 to 20 years to the original loan agreement. You want to keep that in mind, but there's different types you can actually get where it won't be a separate payment. And I'm going to talk about that. But sometimes it's a separate payment, and sometimes it's just an extension added on, like just mixed into your original loan, and you'll do that with another company. So what they'll do is usually just pay off the other company and then lend you more money, and you'll be able to get money if you qualify. So based on the lenders, they use home equity eligibility to allow a borrower to potentially obtain large funds in the future. Example, personal loans. So once you refinance, you're going to see offers come in the mail. So you want to be careful. They do offer a lot of personal loan, unsecured loans after that, because your name go in the bucket. Then everybody just want to loan to you. So be careful, because those can have variable interest rates and be pretty high. Tax advantages is something to look forward to when you do pull from your equity, highlighting tax deductions when using itemized deductions on your return, okay? So we kind of talked about that, but we didn't, because I'm supposed to be getting to a tax session with you guys where we're going to talk about the advantages of investing as an investor and tax deductible things you can look forward to, as well as ways to kind of defer taxes. Okay, defer it. Okay, not pay it, but defer it over the years, and sometimes it'll help you out. So adding saving potentials for investment. So this will add saving potentials for you, because sometimes you get deals and offers as well. So just keep that in mind. If you're doing good in your payment plan, they start calling. Now, pros and cons to using your equity. Okay, this loan is secured by your home. So remember that. This is a con. This could be an issue. So if the loan is not paid or become delinquent, you are at risk for losing your property. Not every home has equity. Okay, so remember that. Remember the situation, and that's why you got to be able to know the market, be able to compare the comps and what's going on. Is it going down, going up? The market slowed down when the interest rate went up, so you want to pay attention to that. And it didn't take away from the value of homes, but you want to know what factors does that. So buyers must understand how to calculate their equity, which should be between 10 to 20% to be considered eligible to borrow. And this is lender Pacific, okay? Some home equity loans have a closing cost, application fees, and we're going to get into some of the fees that you want to be aware of, because that's going to take away from the monies that you receive in the end, especially if you did the process where you're switching lenders and they're giving you money. You can able to have the money and do what you need to do. Just know that these fees is going to be taken out of that as well, and it could be a good amount of fees. Okay. The process can be rigorous and stressful, just like the traditional mortgage. The process is similar. Borrowers must provide detailed information for the loan to be issued. This is not a fast cash option, okay? So if you're looking for fast cash right now for the New Year's, no, this is not a fast cash option, okay? But this is an option for people who may need it. Original loan payments can be doubled. So this is kind of like, you got to be able to pay because when you have the money in the loan, people sometimes get the money, and they do. They be like, okay, if I get $20,000, I'm going to take the first $5,000 and put it to the side, and I'm going to pay the loan payments. But what are you going to do when the $5,000 is finished? Even if you think like that, because most people don't think like that. That's how I think. Okay, I just put the first $5,000 and let it pay for itself, and see if give them a little interest back or whatever may be the situation at the 5 months. You got to be able to pay. Okay, so some home equity loans have a closing cost, application fees, and we talk about the process is rigorous. Original loan payments can be doubled. In some cases, the payments are separate depending on the lender. Okay, sometimes they are separate. Okay, hold on 1 second, y'all. Give me a second. I'm gonna have to take this off the screen real quick. Give me 1 second, y'all. My OCD is really kicking in. Okay? I know y'all watching, but I'm very OCD. And I went over these PowerPoints, and I probably was because I was listening to, I don't like the U. It's bothering me. It's bothering my life, y'all. Okay? I love y'all. Thank you for your patience. They're like, I wish I had two different eyes. Sometimes I look at it and it just looks perfect. Now, let's get back to it. Okay. I appreciate you guys. I appreciate your patience. My OCD self. Wish my eyes was OCD. Okay. Now, let's get to it. This was the last PowerPoint that we were on. So, this is kind of the cons to it. You can't always go in and think it's perfect. Now, other cons. See? It say I'm happy. My anxiety was kicking in. It was bothering me. Okay. So, if the market changes, my coworkers laugh at me. I'd be like, girl, dyslexia. Whew. For God be the glory. We still intelligent. Don't pay no mind to me. My anxiety, I just hate mistakes. But nothing in life is perfect, guys. But at least y'all learned it from someone who like to try to do things correctly, so you guys could know that I try to share as much detailed information correctly as possible. Now let's get back to it. Okay, Happy New Year. If the market changes, there is a risk for negative equity. So continuing, these are cons. What is negative equity, y'all? Negative equity is when the market fluctuates and the value of the home decline. This can happen for many other reasons outside of the market change, such as natural disasters, zoning changes. Zoning changes is rare. Natural disaster is rare, but you never know now, especially if you live in LA. Places that have Florida, Texas had big flood, things like that. But negative equity can happen, and if you already took money out of your home, then how much the home is valued can go down versus how much you owe, and that becomes a problem. Okay, it is important to understand if you have a fixed interest rate. I should have put that in red. please, guys, do not play around with these lenders. Read it, negotiate. If they don't want to change it, if that's what's all they offer, move on. Okay, you have other options. Just because one door closed doesn't mean another one don't open, guys. Just take your time. Have an adjustable interest rate can cause you to have a fluctuation in payments in the future, and that could be a major issue, especially us in this situation where everybody trying to go up on a little man, talking about more insurance payments, more rent, more this. Okay, I'm complaining on the side. I know you guys are too, because it's ridiculous. Understanding the fees. Now, these are some fees you want to keep in mind with basically this kind of like refinancing, and you refinancing to pull out your equity. So this is what they have to do. The same things they basically have to do when you're doing a basic loan. So understand these extra fees. Appraisal fees between $300 to $500. Credit report fees. I don't know why they charge you for that, because it's free to pull, but it goes against your credit, but they charge you for that. Or origination fees. This is something that they charge. Documentation or filing fees. Title fees, which can range between $100 and $500. Now, title, this is like a title search, basically. It is. And you have to pay for it because they need to know if there's other liens on the property to issue this particular loan. If discount points are available, it can be used towards the transaction. Discount points can lower the interest rate or be used for fees associated with the loan. So it can replace some of these fees, those points. Now, I'm not a realtor, I'm not a loan expert, but I don't know. I really asked a realtor how they calculate those points. She didn't even know. But they got some type of mathematical equation where they give people points based on their payment and all this type of stuff, and then you can use that to apply to your loan, okay? And yeah, it is based on your credit, because when I had like 2 points or something when I did my first home loan, and I was able to use it to waive some of these fees, or you can use it to lower some of the percentage of interest. Does that make sense? I would use it to the interest. I don't know what I used it for before. I should have used it towards the interest. I most likely did, because I ain't crazy. Okay? Now, understanding the fees. In theory, borrowing through equity can be a lower borrowing cost versus credit cards and unsecured loan. I keep saying that because we are in situations that people are using credit cards and unsecured loans. I understand. And those secured by them title, one-day title, like one-day loan, and they use your title of your car. Please don't do it. You'll be better off borrowing from family and going through the headache of arguing with them instead of getting your car taken away. I'm being honest. Things are hard. I already talked about it. What we had to be ready for, cohabitation and all types of stuff. And it's so crazy because I talked about this like 2 years ago, a year and a half ago. Like, it's just really about to get hard for people, especially when we have this mass migration coming on. You're going to see more of a fluctuation of the workforce. And America is going to really have a hard time getting jobs, especially because of our psyche. Now, that's something we're going to talk about on another live. I kind of went to the left, but I do think that's going to play a part when we do another session in Secure Your Energy. Our psyche and our priorities are going to wave us out of certain markets, working markets, and certain skill sets as Americans. And I really think that we need to hone in on that and really get back hands-on. Okay, so now let's move forward. You always got to have a skill, like if everything happened, I'll be able to do here. If everything happened, I'll be a nurse, I'll be able to do here. Because people here be nappy, they needed it cut. If you know electricity, that is something forever. Okay, you got to have a forever skill, okay? Something simple. Now, let's move on. Y'all didn't know I know what I do here, huh? Move on. Using equity. Okay, so key takeaways from this particular subject, okay? It can benefit a homeowner or investment because it's consistent payments. It can be fixed. You want to make sure it's fixed. It can be consolidated into one. That's their best option. That's what I would choose, not 2 separate payments. Lower interest rate compared to the other options we talked about. Long payment timelines, okay? But you're trapped in for a long time. What we call it? What do we call it, y'all? The death note. That's what the loan agreement is. AKA, yeah, you'll be paying it off for a while if you don't know how to strategize and pay it off correctly or have large sums of money to pay it down, okay? But other key takeaways, just I didn't want to just throw that little jab, but that's why we go through the tax lien and tax deed process. We figure out how to acquire property without having that large note connected to us, and then we make it just pay off that large note if we have it. Hint? Does that make sense? Take your time. Now, next we can look forward to tax deductibility when we do pull out our loan equity, our equity from particular home. Okay. Now, using equity to gain assets, pulling equity out of home is not always right for everyone. There's a potential to lose your home. Red light, red light. Yes, Lashley is very honest. If you don't honor your payments, okay, do not. These payments could double. They can increase by 25%, 30%. That's a lot. Like I told the insurance person, excuse me, you gonna increase my payments because of all these factors that y'all going through as a company, but I'm going through as a person, and we ain't gonna increase in our pay. Okay, so I understand. Home value change with market fluctuations. So you don't want to have a small borrowing margin like 15% and just take it all. Even most lenders won't try to do that to you, but some would. They just want the money, but you don't want to. That's playing too close. You want to have some equity buffer still in your home. Does that make sense? Okay, so if I'm gonna borrow for my equity, I at least want to have 30% of equity within my home, and I can take 15, 30. You know, Does that make sense? Okay. Home value changes with the market fluctuation. Interest rate can rise depending on the loan agreement. Payments can become unmanageable as time changes. Okay, please be aware. Your credit score is affected by taking out a home equity loan. So that's why I said I don't know why they charge it for when it's like somebody pulled your credit. They do a hard credit pull, and that can lower your points a little bit. But it comes off. You know how that works. A couple of years down the line, I know I'm brutally honest, but these things you need to know. It's like brutally honest. Never borrow from your home equity to do these things, okay? Pay for a vacation, a wedding, no. A prom, no. College, no. No, I know it's hard, okay? You got to find a way. If you can borrow from your 401k and pay it back within a year, that'll be a better option than doing equity, okay? To buy a car, no. Yes and no. If you find it beneficial where you buying a car without a loan and it outweighs the option of getting a loan for a car, which can, have a whole separate interest rate. You got to weigh the option, got to make sense, but not just to buy a car. Investing in risky real estate, i.e., tax liens and tax deeds. It can be risky. That's why I want you guys to be educated. That's why we have these lives. That's why I have such a detailed program for you guys. It has so much information. I have so many seminars. I want you to be successful so it won't be risky. So maybe later on you can take out your equity, but don't do it. Don't do it. Not right away. Don't do it for Bitcoin. That's just my opinion. Don't do it for small investments. That's risky. Okay? To pay off credit cards and other debt. Only way I do suggest this, if your APR is so high, it makes sense. And at this point, the APR is so high, if it makes sense, make peanut butter and jelly, make the sandwich. You know what I'm saying? Put it together, switch that debt over, but you need to understand that your payments is going to change now. But it'll probably be cheaper than how much you're paying on those credit cards. So I put it under never borrow, but I wanted to talk about it. You never know. We all living different, but you want to be able to evaluate that situation, okay? Now, I hope I can save this on Instagram. We are live on Instagram, y'all. Hey, Instagram. Thank you for tuning in. I see you popping your heads in. A shout out to Rumble. Love you guys. YouTube, Facebook. I appreciate you guys. Please like and subscribe. All of the members that's in the Facebook group, please like and subscribe. Please put your questions in the group. We're here to help. I love to help. I'll give you the raw truth. I want to give you the raw truth. This is what I do. Okay? Now, remember, make a budget and stick to it. Make a budget and crush it. You got plans. That's not only going to help you be more marketable credit wise. You're going to be able to get to your goals of going to the tax lien and tax deed sale. Okay, say that $5,000 budget and stick to it. Use the borrowed money for things outside of risky investments. I should have just put that in red. I want you guys to be safe. Use it what it's associated with. Like if I was going to take money out, I would use it what I was associated with. Now, just because it's real estate doesn't mean it's always risky. Let's talk about it. Refinance under fixed interest rate. We talked about that. Make sure you know what you're doing. Keep your eyes on your credit score, okay? It could be a benefit in the future. Using home equity loans to pay for home improvements. That can increase the equity of your home. This is good to use it for. You're using it for that particular home. It could increase the home equity. Then you can sell it, make a little bit of more change, That could be helpful. Buying land to build on. You see, I'm not saying using the tax lien tax deed process is no, because I promote it. But make sure you know what you're doing. Make sure the land is clear. Make sure that the land is buildable. It's more easy to acquire land. I like land versus getting a home because there's so much stuff that be attached to mortgages, people, and their drama. Sometimes land have some restrictions, some things you need to find out about. Maybe invest, don't invest. You may could fix it. You may care. Those type of things. I like land. So that is something that they recommend, buildable land. Paying for emergency repairs for the property. If you want to keep your property up to date. And if it have value in it, you want to pull out of it and upgrade it. And as I say, sometimes the upgrades, the things that you do to fix it, can increase your marketability for the home. So it could be two-way beneficial for you when it comes to emergency repairs. It can help you out. But remember, the amount that you pay is going to be increased, okay? Now, other lending options. We got to talk about other stuff, other lending options. Personal loans. Remember, the interest rate can be high on these. Also, personal loans are given by a crowdfunding institution. I did deal with one. Was called Prosper Loan. Interest rate was pretty high. It's about 13%. It wasn't bad. Unsecured. Payments was a little high, but I was able to pay it based on my income, debt to income ratio. And that was something I was able to clear based on a clear, concise plan. But if I did not, that debt would have been a problem because the bill was like $600 a month, $700 a month. It's like a whole nother mortgage. But you need to know which was you using it for. You got money, you know what I'm saying. So no interest credit cards. Now they do have some offers where these interest rated credit cards are pretty high, but sometimes up to 16 months they give you no interest. So if you can use that money, let's say $6,000, and you can pay that back before the 16 months, you need to make hefty payments and not the minimum. You can beat the interest. So that's usually what I try to play. I play that game, beating the interest. It helps you, especially in a market like this, but you need to know how to play it. And you can't have a whole bunch of credit cards. You need to know how to shut some stuff down, like cut it off, never use it, only use it for this. You can't play any games when you're playing that type of game, okay? You need to have self-control. So cash out refinancing. I don't know if you know about this option, guys, but I wanted to share it with you. Cash out refinancing, the option for replacing your existing mortgage with a new loan. And that's something that I told you I did. It was like pulling out equity, but this is the actual name, cashing out refinancing for a larger amount. The difference in the transaction is you will receive the cash for your use. With this option, you will have 1 month payment instead of 2. So if you go back to your original lender and say, I want to pull out my equity, and it's going to be a second payment. It's not going to be involved and merged in the first one. But if you go to a new lender, as I told you, they will pay off that first lender, and then you'll have a more bigger amount, maybe more interest. Definitely more interest based on the market. But you don't want, what don't you want, guys? The most important thing I can say is in this broadcast, you don't want fluctuating interest rates. No, no, no. That's all they offer. Move on, okay? Now, the next option you have is a reverse mortgage, but this is for elders, if you know just a little bit about that. This is for use of individuals 65 or older. This is a way to tap into your home equity. The home equity loan is withdrawn and used like a reverse mortgage. And this is where they don't have to go look for another lender. They could talk to their lender about a reverse mortgage. What's their options, okay? So if you know seniors that has some, but just know that the payments is going to be increased. Key takeaways. Stay up to date on your mortgage payments. Stay up to date on everything. You know what I'm saying? Don't eliminate as many unnecessary bills as possible. I don't have my debt-free. Oh, do I have my debt-free book here with me? No. But my debt-free book that I use to calculate, my everyday, my every month payments for different entities has been really helpful for me. Looking at the trends, visualizing like, wow, in September I had 5 credit cards, and now, starting now, I have 3. You paid off 2, and that's something that you want to look forward to. So you want to track your debt, track your accomplishments. You have to give yourself a little reward, like, wow, and not create more, okay? Understanding your mortgage contracts and your interest rate term. I can't stress it enough. Understand all finance and charges associated with equity withdrawal. That could be about $1,000 plus, $1,000 to $2,500 taken off of what you thought you was gonna get. Yes, the title search in itself is $500. Okay, fees associated. So keep that in mind. Is it worth it? Always receive paperwork highlighting fees and disclosures related to the transaction prior to signing the agreement. They are supposed to show you this about your calculations and everything, okay? If the company you're dealing with is playing a little sneaky and they're not showing you things and they're just talking, and you're not seeing nothing in paper, you need to be questionable about that particular entity, okay? Now, understanding what is required within your escrow account and how monies are distributed monthly via your monthly payment statement. Now, this is something a little bit separate. This is within your loan, and that's something that we may visit later on, because this is good for homeowners to understand, because we're going to teach you how to crack down on your mortgage term by making payments, by making certain payments, certain times, certain amounts. This is how people pay down their home loan before they die, okay? Or before the term. You know what I'm doing? Trying to be nice. So we're going to go into that. So one of the first things you want to understand is, what is your escrow? What is an escrow account? What it comprised of? Why do they have it? What do I need to expect needs to be in it? And how does the money get distributed? Because if you don't understand about escrow, sometimes these companies could take advantage of you. Okay? I had to report one of my other home loans, Amerisave, about that, trying to have too much money in escrow for no reason. And they're talking about, we're going to give it back at the end of the year. I'm like, okay, you're taking an extra $200 a month and for no reason, because you don't need it. Everything that's within the escrow, the insurance, the taxes, the taxes to the state, what needs to be paid to y'all, that's what's calculated in a nutshell, is satisfied with this amount. But then you want an extra $200 for what? For what? Oh, well, that's going to be returned to you. I said, well, not today. I'm sorry. I got to finish off with a bang. I did report them to the Federal Trade Commission and the Consumer Protection Bureau. And what they had to do? Fix that, okay? So in all cases, this live was to get to this question. Is a home equity loan worth it? Is it worth it to you as an investor? Is this something that you'll find beneficial for you to use to invest? as well as is it beneficial for you to use to, hold on, don't mess up. Let me remove this. Okay, excuse me, y'all. Just talking a lot. Is it beneficial for you to actually use these particular funds to invest or use these funds to get your head above water? What is the expectation? Can you pay it back? Is it a short-term fix? These are the things that we need to understand when we're trying to secure our energy. Now, I want to close off by saying the reason why we have these sessions, Secure Your Energy, is because a lot of other entities has been securing our energy for us. My lips white from my makeup. Hold up, y'all. I'm having a don't be messing with Lashley. Y'all know I'm raw. I'm real. Hold up. Got my makeup caked up. I love y'all. Okay. Now, one of the important things about securing your energy, and the reason why we talk about that, because a lot of other entities, to be honest, are securing our energy for us. We have no control over our debt to income ratio. We are overwhelmed by bills, credit cards, bad decisions, our psychological integrity. That's one of the things that we're going to get into possibly next week, where we talk about, because I've been talking about migration and a lot of the effects that it will have on us as not only taxpayers in the distribution of our program, but actually the working market. And we've been in a terrible working market, but it's not just the working market too. It is our psyche. It's what we find important as people. And what we find important, I'm going to be honest, is not securing our energy, not providing assets for us. Assets like homes, like gold, things that's not going to just disintegrate. That's backed behind things that we can use in the long term. So these are some of the things and the concepts that we're going to continue to talk about on Secure Your Energy. With that goes to say, I think that's all we have to share today. We will come back on Monday with the trending topics, because there's some things that's going on out there that's pretty crazy, especially with the scams. But there's other things in the housing market that I want to keep you up to date with. If you have any subjects that you want to talk about, please let me know, especially when it has to do with tax liens and tax deeds. You know I love it. Next month coming up, my goal is to actually go to the Making Tax Lien sale. I keep talking about it. Life keeps punching me in the face, but I do have more access to that area, and I'm trying to get things set up. So sometimes this weekend we're going to be working on that. So the tax lien sale in Georgia takes place the first Tuesday of the month in every single county. So if you are in Georgia, please do some research before you go to these sales. We do have a section on YouTube, I believe is in the member section though. It's only $9.99 a month on YouTube, where you're going to get full access to our Georgia seminar, okay? And it breaks down our a few tax lien sales we went to, key elements about what to expect when investing into tax liens and tax liens in Georgia, as well as foreclosure processes, which is not a foreclosure process, but any process at the end. To me, I call it a finisher of foreclosure, because you're closing off on a deal. So understanding the different terms that we use, keeping it interchangeable, okay, because we are state to state. But we do have that information available for you guys on YouTube, as well as on the website. We have a whole seminar of Georgia tax lien investment seminar, and it comes with a few more perks too. So with that goes to say, I love you guys, and I will see you on Monday. Have a great weekend, and thank you for being with Lashley and being part of Primetime Home Buyers.
The real estate market often seems like a distant world where only an elite of experts is successful. In a time of so much uncertainty in the air and bad news, realist investing can seem intimidating. But today, I want to tell you that if you make the right decision today, you can enter the real estate market from the back door. Bad credit record? No credit at all? Do you dread the idea of having a home loan? Do you dream of owning investment properties? You are in the right place and right time, because we have created a program which is a tax lien and deed investment online course of only 14 hours. This course is specially designed for people like you who have big dreams. You will learn at your own pace and everything from your home computer. This is your chance. Join our membership for $19.99 a year. What are you waiting for? Visit our website primetimehomebuyerBuyback.org and sign up today for course access.